Hey everyone, ready for another deep dive? Today we're tackling the best cities for real estate investment in 2025.
And we've got some interesting sources to work with.
We do. We've got a YouTube video by Sean Pan, he's a pretty seasoned investor, and an article from Everyday Next listing their top 10 cities for real estate.
A good mix of data-driven insights and broader trends.
Exactly. So let's dive in.
Let's do it.
So Sean Pan, in his video, he lays out a really, it's a systematic process.
Like a step-by-step guide for finding those under-the-radar markets.
Totally. And he's all about the data.
Oh, absolutely. He starts with job growth. Makes sense, right?
Yeah. More jobs mean more people with higher income.
Exactly. And that drives up demand for housing.
Leading to, you guessed it, higher rents and property values.
Exactly. He actually sets a minimum threshold for job growth at 2%.
He uses data from Department of Numbers for that.
Yeah. And then he goes even deeper. He uses city-data.com to analyze population trends.
Median income, both current and back in 2000.
Median house values, too, over the same period.
And even the crime index.
Really paints a detailed picture of a city's economic health.
And this is where it gets really interesting.
Okay, I'm intrigued.
He brings up Ocean City, New Jersey as an example.
Okay.
At first glance, it looks incredible.
Oh, yeah.
Job growth, over 9%.
Wow.
And crime is actually going down.
Sounds promising.
But here's the catch.
Okay.
Population shrunk by over 27% since 2000.
Whoa, that's a big red flag.
Right. What's going on there? Even though home values have more than tripled since 2000.
I mean, that declining population, it just makes you wonder.
It does. It makes you think twice, right?
Absolutely.
Like maybe there are other factors at play.
Exactly. Maybe it's specific to Ocean City, or maybe something's happening in the larger New Jersey market that's pushing people out.
Totally. Then he contrasts that with Lawrence, Kansas.
Okay. How does that compare?
More moderate job growth, about 8.5%.
Okay.
But healthy population growth and home values have doubled since 2000.
So a bit more balanced.
Much more, yeah.
I see. Yeah, it's really interesting to compare those two examples side by side.
Yeah, it highlights that sustainable growth usually comes from a bunch of positive factors, not just like one explosive metric.
Totally. It's about the bigger picture.
Exactly. So after gathering all this data, Pan applied some filters to kind of refine his results.
Oh, smart.
He looks for cities with a population over 100,000 for market stability.
Makes sense.
Population growth above 20% since 2000, got to have people moving in, right?
Right. More demand.
Household income change above 30% since 2000.
Okay.
Median house value increase above 40% since 2000, but ideally,
Ideally.
with a current median value under $200,000 for better cash flow potential.
Got to factor in that cash flow.
And a crime index below 500.
Okay, so he's really trying to zero in on those sweet spots.
Exactly. He's all about being systematic and objective when evaluating markets.
That makes sense. You don't want to let emotions cloud your judgment, right?
Absolutely. But data isn't everything, right? What about those intangible things like lifestyle?
Right. That's where Everyday Next comes in.
Okay, what do they have to say?
Their top 10 list for 2025 gives us a sense of which cities are considered, well, desirable.
Okay, let's hear it. What are their picks?
Austin, Phoenix, Nashville, Denver.
Okay, hold on.
Atlanta, Charlotte, Dallas, Tampa, Salt Lake City, and Raleigh.
Okay, I'm seeing some overlap with Sean Pan's criteria here.
I was going to say, a lot of these cities are known for strong job markets, growing populations, and diverse economies.
So both approaches seem to be pointing us in a similar direction.
It seems that way, like they're validating each other.
Okay, so we've got these two sources painting a picture of what's hot in real estate for 2025.
But where do you think these two sources converge?
Well, they both definitely highlight job growth,
Yeah,
population increase, and a diverse economy.
like they're speaking the same language.
Totally. But the level of detail, that's where they diverge.
How so?
Everyday Next is focused on those broader trends, the overall desirability of a city, while Sean Pan gives us that very specific method for evaluating investment potential.
So it's like the macro versus the micro.
Exactly. So maybe the ideal investment city is found at the intersection of these two perspectives.
I think you might be onto something there. It's like you need both the wide-angle lens and the zoom lens to really get a clear picture.
You got it. We need the data, but we also need to understand the human element. What makes people actually want to live in a certain city?
I couldn't agree more. It's about balancing those quantitative factors with those qualitative factors.
So we've got a good starting point, but where do we go from here?
That's a great question, and it's the perfect way to kick off part 2 of this deep ride. So we've got our list of cities, but the work's not done yet.
Oh, absolutely not. It's time to really dig in.
We need to zoom in neighborhood by neighborhood.
Neighborhood analysis, that's where it gets real.
Right, location, 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 as they say.
They do. So what are we looking at specifically within each city?
Well, think about things like proximity to amenities.
Okay, yeah, schools, parks, shopping centers, all that.
Exactly, and the age and condition of the housing stock.
Are we talking up-and-coming neighborhoods ripe for appreciation or more established areas?
Right, right. You got to know what you're getting into, and don't underestimate the power of, actually going there.
Boots on the ground.
Exactly.
I love that.
If you can, visit the neighborhoods, talk to local real estate agents, maybe attend an open house or two.
Get a feel for the vibe.
Yeah, totally. It's all about immersing yourself in the market.
What else should we be looking at during this due diligence phase?
Rental demand.
Ah, right, cash flow properties.
Exactly. You need to make sure there are enough potential renters.
Okay, so we're looking at vacancy rates.
Average rent prices.
And the types of properties in demand, are we talking single-family homes, apartments, condos?
Right, right. And who's the target demographic?
This is where those lifestyle factors really come into play.
Oh, for sure. Like if a city is attracting young professionals, there might be more demand for apartments downtown.
Makes sense. And what about the regulatory stuff?
Oh, yeah, that's crucial. Different cities, different states, they all have different laws.
Landlord-tenant laws, property taxes, zoning, all that.
You got to do your homework.
You can really impact your bottom line.
Big time. Oh, and while we're on the topic of the nitty-gritty,
Infrastructure.
you got it. Transportation, utilities, internet access.
It all matters to renters.
Absolutely. It affects quality of life.
Okay, we've talked about what to look for, but what about the potential downsides?
Ah, yes, the risks.
What should investors watch out for?
Well, economic downturns are always a possibility.
That's true.
Job losses, declining incomes,
They can hit rental demand pretty hard.
and property values too. So it's important to think about the economic resilience of your target market.
Diversification is key.
Absolutely. Don't put all your eggs in one basket. Natural disasters.
Oh, right. Hurricanes, floods, earthquakes.
They can cause serious damage, costly repairs, lost rental income.
That's where insurance comes in, right?
For sure. Make sure you've got adequate coverage for the risks in your area.
Makes sense.
And don't forget about regulations. They can change.
Oh, yeah. Zoning laws, tax codes.
It can all impact your profitability.
So stay informed.
Exactly. You can't predict the future, but understanding the risks, taking steps to mitigate them.
It can protect your investment.
Absolutely. Okay, ready to shift gears a bit?
Okay, where are we going?
Let's talk investment strategies.
Love it. So you've done your due diligence. You found a promising city.
Now what?
How do you actually approach buying an investment property?
There are a few different strategies. Each has its own, pros and cons.
Take it down for us.
Okay, so one popular strategy is buy and hold.
Classic.
You buy a property with the intention of holding onto it for the long term.
Generate rental income, benefit from appreciation.
Exactly. Slow and steady wins the race, right?
Right. It's all about building wealth gradually.
It can be a really effective strategy, especially in markets with strong long-term growth potential.
But it requires patience.
A lot of patience.
Our market can fluctuate.
Oh, yeah. You got to be able to ride out those dips and valleys.
It's a marathon, not a sprint. What other strategies are out there?
Flipping.
Flipping. Bit more.
Risky.
Yeah.
Definitely. You buy a property, renovate it, and then sell it quickly for a profit.
Ideally.
Right, ideally. It can be very lucrative, but you need a lot of capital, expertise in renovations, and good market timing.
Not for beginners.
No, not really. And you really have to factor in all the costs.
Purchase price, renovation expenses.
Holding costs, real estate commissions.
It adds up. What other strategies should we consider?
Wholesaling.
Okay, what's that all about?
It's about finding those undervalued properties, putting them under contract, and then assigning that contract to another buyer for a fee.
So you're basically a middleman.
In a way, yeah. You're connecting buyers and sellers.
Sounds like you need some strong networking skills.
Absolutely. Market knowledge, negotiation skills.
Okay, what if someone isn't ready to buy a property just yet?
There are still ways to invest in real estate.
Like what?
Real estate investment trusts. REITs.
REITs. Okay, tell us about them.
They're companies that own and operate income-producing real estate.
So office buildings, shopping malls, apartments.
Right, and they're required to distribute a good portion of their profits to shareholders as dividends.
So it's a way to get into the real estate market without actually buying a property.
Exactly. You're essentially buying shares in a company that specializes in real estate.
Makes sense.
And there are different types of REITs focusing on different sectors of the market.
Okay, so do your research.
Definitely. Choose REITs that align with your investment goals.
And your risk tolerance.
Absolutely. Remember, the best strategy really depends on your individual circumstances.
Your financial goals.
How much risk you're comfortable with.
It's not a one-size-fits-all situation. All right, let's circle back to that top 10 list from Everyday Next.
Love it.
We've talked trends, due diligence, even investment strategies.
Now it's time to get specific.
What are the unique opportunities and challenges of each city on their list?
Each city has its own flavor, its own dynamics. Let's dive in.
Let's start with Austin, Texas. What's the deal there?
Austin has been booming. The tech sector, the music scene, it's drawing tons of people.
Sounds great, but we know there are concerns about affordability.
Oh, definitely. Home prices have gone way up, and there's a lot of competition among buyers.
So is Austin still a good option for investors?
It can be, but you have to be smart about it. Remember, Austin is a big city.
With diverse neighborhoods,
Exactly. There are still pockets of opportunity if you focus on up-and-coming areas.
places with potential for appreciation.
Right. Maybe areas a little further out from downtown with older housing stock that could be renovated.
Okay, so it's about looking beyond the hype and really understanding the nuances of each neighborhood.
Absolutely. And remember, Austin's growth isn't stopping anytime soon.
More tech companies, more jobs.
All driving up housing demand.
But investors need to weigh that potential for growth against the risks.
Absolutely. It's all about balance.
Okay, let's move on to Phoenix. We talked about sunshine and affordability.
Yeah, great weather, lower cost of living compared to those coastal cities.
But water scarcity, that's a big issue.
It is, but it doesn't have to be a deal breaker.
Okay, so how can investors approach that?
Smart investors will look for properties with water-efficient features.
Makes sense.
Maybe explore opportunities in areas with access to, more sustainable water sources.
Okay.
And they'll definitely factor those potential water costs into their financial projections.
So due diligence is crucial in Phoenix.
More than ever.
Okay, let's shift gears to Nashville. It's got that energy, the music scene, the food.
It's attracting young professionals, creative types.
But we talked about infrastructure being a potential strain.
Right. Rapid growth always presents challenges.
So how can investors navigate that?
You got to analyze those neighborhoods carefully.
Okay,
Focus on areas where infrastructure improvements are being made.
like public transportation, schools, utilities.
Exactly. Look for areas with a forward-thinking approach to development.
They're the ones that will likely experience more sustainable growth.
Totally.
Okay, time for Denver. It's always been a draw for those outdoor enthusiasts.
Stunning mountain views, amazing recreation.
But now it's got that tech and entrepreneurial scene too.
It's an interesting mix.
How can investors handle that kind of evolving landscape?
You need to be really specific about your target demographic.
Okay, yeah. Are you looking to attract young professionals?
Or people seeking a more outdoorsy lifestyle.
Because each group is going to have different needs.
And they'll drive demand in different areas of the city.
Right, Atlanta, Georgia, major hub, but traffic congestion and social disparities are real issues.
They are, yeah.
How can investors balance those with the city's potential?
It's all about being strategic and, doing your research.
Okay.
Look for neighborhoods that are experiencing revitalization efforts.
Where there's a focus on community development, improving transportation.
Right, areas where positive change is already happening.
That makes sense. Okay, Charlotte, North Carolina. It's really transformed itself.
Gone from a purely financial and textile hub to a more diverse economy.
With a growing tech sector.
Exactly.
What does that mean for investors?
I think it makes Charlotte a really compelling option.
Okay.
You've got that stability from the more established industries.
And potential for growth from those newer sectors.
Right. Plus, Charlotte is still pretty affordable and it's got a high quality of life.
So that creates a solid foundation for appreciation.
Exactly. But, of course, as with any rapidly growing city, there are concerns about infrastructure keeping up.
So investors need to be mindful of that.
Absolutely.
Back to Texas.
To Dallas.
It's got that strong economy, diverse population, but
Those Texas property taxes?
they're no joke.
No, they're not.
How can investors deal with that?
Careful financial planning, you really need to factor those costs into your projections.
And maybe think about strategies to mitigate the impact.
Right, like focusing on properties with lower assessed values.
Or exploring areas with potentially lower tax rates.
Exactly. And remember, while Dallas benefits from the energy industry, that sector can be volatile.
So diversify.
Always good advice. Look for properties that appeal to a wide range of tenants.
Tampa time.
Sunshine and beaches.
It's got that relaxed Florida vibe, but it's growing and diversifying too.
It is.
What should investors keep in mind about Tampa?
Well, first and foremost, hurricanes.
Oh, right, coastal city.
And rising sea levels.
So insurance costs are a must.
A must. And think about mitigation strategies, too.
Okay, so we've got the climate risks. What about the reliance on tourism?
That's another factor to consider.
How can investors address that?
Look for properties that cater to a year-round population.
Not just seasonal tourists.
Exactly. Areas with a mix of residential, commercial, and recreational offerings will be more resilient.
Salt Lake City. It's a unique mix, isn't it?
Tech innovation, stunning natural beauty, and that Mormon cultural influence.
How should investors approach this market?
It's a great example of a city leveraging its unique identity for economic growth.
Okay.
Investors should look at areas experiencing development driven by the tech sector, but Don't forget to consider the impact of the Mormon culture on the real estate market.
Makes sense. And of course, water scarcity is still a concern.
Always look for properties and neighborhoods with waterways features and sustainable practices.
Great point. Last but not least, Raleigh, North Carolina.
Raleigh has become a major center for technology and research, and
High quality of life.
definitely.
Available too, relatively speaking.
Right.
Key takeaways about this market for investors.
I think the main thing is that Raleigh's success is tied to attracting and retaining a highly educated workforce. So, investing in areas connected to the Research Triangle Park and those surrounding communities could be a good move.
But remember, we talked about the potential for traffic congestion
Yeah.
and the risk of relying too heavily on the tech industry.
Diversification is key. Look for properties with easy access to public transportation.
Makes sense.
And explore neighborhoods with a mix of different industries, not just tech.
Wow, we covered a lot.
We did.
What are some key takeaways you want our listener to walk away with?
I think the biggest one is that real estate investing is not one size fits all.
No magic formula.
None whatsoever. You need to understand the fundamentals, do your research,
And
and
make informed decisions based on your own goals.
exactly your goals, your risk tolerance, all of that.
It's like we've given our listeners a map, but they have to go out and find the treasure themselves.
I love that analogy.
And remember, the market is always changing.
Always.
So stay adaptable, stay curious, and keep learning.
Couldn't have said it better myself.
Okay, so let's get granular with these top 10 cities from Everyday Next. We've talked about the broad strokes, but now it's time to zoom in on each one.
Yeah, let's unpack those unique opportunities and challenges.
Austin, Texas, first up. It's been a real estate darling, but is it still a viable option given those affordability concerns?
It can be. Remember, Austin is a big city, lots of different neighborhoods.
Right, with their own microdynamics.
Exactly. You can still find pockets of opportunity, especially in those up-and-coming areas a bit further out from downtown.
So thinking about those areas with older housing stock that could be ripe for renovation.
Right. It's all about being strategic and knowing where to look.
And remembering that Austin's growth isn't slowing down anytime soon.
Not at all. Those tech companies keep coming, bringing high-paying jobs.
Which fuels that housing demand.
Yep. But investors need to balance that potential with the risks of a potentially inflated market.
So due diligence is more important than ever.
Absolutely.
Okay, Phoenix, Arizona. Sunshine, affordability, but water scarcity is a major concern.
It is a concern, but not necessarily a deal breaker. It's more about understanding how to manage that risk.
Okay, how do you do that?
Well, you look for properties with water-efficient features. Explore those areas with access to more sustainable water sources.
And really factor those potential water costs into your financial projections.
Exactly. It's all about thinking long-term.
Okay, Nashville. It's booming that infrastructure is struggling to keep up. What's the best way to approach a market like that?
Look for neighborhoods where the city is investing in infrastructure improvements. Public transportations, schools, utilities, those are the things that will drive sustainable growth in the long run.
So it's all about aligning your investment strategy with those revitalization efforts.
Exact.
Denver, Colorado. Mountain views, outdoor recreation, but now it's attracting those tech companies and entrepreneurs. How do you navigate that?
Think carefully about who you're trying to attract as renters. Are you going after those young professionals working in the tech sector, or are you targeting those folks seeking that outdoorsy lifestyle?
Makes sense. Those are very different demographics.
And they'll drive demand in very different parts of the city.
Okay, Atlanta. It's a powerhouse, but traffic congestion and those social disparities are real issues. How can investors address those challenges?
Focus on those areas undergoing revitalization. Look for signs that the city is working to improve transportation, to invest in community development.
So it's about aligning your investment with the positive changes that are already happening.
Exactly.
Charlotte, North Carolina, it's transformed itself, becoming more diverse economically. What's the investor takeaway there?
I think Charlotte is a great option for investors seeking a good balance of stability and potential growth.
Okay.
They've got a more diversified economy now, which is great.
Plus affordability and good quality of life.
Right. It creates a good foundation for long-term appreciation.
But keeping an eye on infrastructure development is still key.
Oh, for sure.
Back to Texas, Dallas. Strong economy, diverse, but those property taxes.
Yeah, Texas property taxes are a force to be reckoned with.
How do you manage that as an investor?
Smart financial planning. Factor those costs in right from the start. And maybe consider targeting properties with lower assessed values or looking at areas with slightly lower tax rates.
So understanding the nuances of property taxes is key in a market like Dallas.
It is. And remember, diversify your investments too. Don't rely too heavily on the energy sector.
Tampa, sunshine, beaches, but hurricanes and a reliance on tourism.
Right. Those are things to consider carefully.
So how do you mitigate those risks?
When it comes to hurricanes, insurance is essential. And think about properties that are built to withstand storms.
Makes sense. And for the tourism piece,
Target properties that cater to a year-round population.
so looking beyond those seasonal rentals.
Exactly.
Salt Lake City. Such an interesting mix of tech, natural beauty, and that unique cultural influence. What's the key takeaway for investors there?
Salt Lake City is a prime example of how a city can leverage its unique identity to drive economic growth.
Right.
Look for investments in areas that are benefiting from that tech sector boom.
Okay.
But remember to consider how that Mormon culture might influence the real estate market.
That makes sense. And of course, water scarcity is always a factor.
Absolutely. Look for properties with water-efficient features or that are located in those areas with more sustainable water sources.
Finally, Raleigh, North Carolina. It's become the real tech and research powerhouse. What should investors keep in mind?
I think Raleigh is a smart bet for investors who are looking for a long-term growth potential. It's attracting those high-paying jobs, but remember, diversification is still key.
So not putting all your eggs in that tech basket.
Exactly. Think about properties with good access to public transportation and look at those neighborhoods with a mix of different industries.
Wow, we've covered a lot of ground. What are some key takeaways you hope our listeners will remember?
Real estate is all about location, but it's also about timing, research, and understanding the unique dynamics of each market.
There's no magic formula, but there's a lot of opportunity out there.
Absolutely.
So do your research, stay informed, and happy investing, everyone.